Alright, in this short video I'm going to walk you through kind of an intro to accounting for inventory. In this video I'm going to just kind of lay out some of the pitfalls that I see when Amazon sellers really approach this subject, and also kind of my philosophy, because this is a really kind of the biggest wrinkle when it comes to accounting for Amazon sellers, and I really want to help you simplify this process so it's not overwhelming. And I'm going to start off by sharing with you kind of the biggest mistake I see beginners make, and that's thinking that inventory purchases actually equals cost of goods sold. That's not true. It seems intuitive, like, hey, I bought inventory, I should be able to write that off as an inventory expense, but the IRS says, hey, you can't write off inventory as an expense until it's sold. And that's actually why it's called cost of goods sold and not cost of goods purchased. What happens is whenever you buy inventory, that becomes an asset for the business. It's stored up value. You could, in theory, go sell that to someone else. It has an inherent value until it's consumed. So in this process, whenever you buy inventory, it's going to go into a purchases account. And then each month, what we're going to do is calculate the value of the inventory that you sold that month. And we're going to do what's called a manual journal. It's just an adjustment. We're going to take the value of the inventory that you sold each month and take it out of inventory and put it into cost of goods sold. So instead of inventory purchases equals cost of goods sold, this is what the new proper equation is going to look like. It's going to take your unit cost times your unit sold, and that's going to be your cost of goods sold. So when it comes to doing what I call an inventory adjustment each month, you're really working with two sets of data, the unit cost and the unit sold. When it comes to the unit cost, that's something that you're going to be calculating internally. And then when it comes to the unit sold, that's something we're going to lean on Amazon or an inventory software for. So I'm going to dig into kind of these a little bit further, but just know this is the equation. It's not that complex. Let's break that down a little bit. I'm going to dig into unit cost. So unit cost is something that you're going to track internally. So this is going to change via your business model. So if you're an arbitrage seller, it's going to be a little bit more intuitive. If you are a private label seller, it's going to not be quite as intuitive, partially because private label sellers, they have manufacturing costs, but then they have maybe packing, kitting costs, they have freight costs, they have duty, they have taxes. There's a lot of costs that make up inventory costs. And so I'm just going to assume if you're an arbitrage seller, this is going to be really easy. You just look at your receipts and there's your unit cost straight up for you. But I'm going to focus my attention on private label sellers for most of the rest of this video. So when it comes to calculating your cost, if you're importing from China or somewhere else, you really need to come up with a system to simplify your costs for your inventory. The reason why is there's unit cost and then there's bulk costs. Another way to say it is some of your costs are hard costs. They're going to be the same every single time that you manufacture. So let's say you buy XYZ widget and it costs you $3 to make. And every time that you put in a purchase order, it's always going to be $3 per unit. But then you have other costs, for example, freight. That's something that's calculated at the shipment level, not the unit level. So that's kind of like a soft cost. If you ship 100 items, your freight per unit might be $2. But if you ship 200 items, well, then your freight per unit is only going to be $1. So that's a cost that fluctuates. So from my philosophy when it comes to accounting for inventory, and I'm going to go into this process in a different video, but my philosophy is, hey, to simplify your inventory accounting, we really need to break up your costs into separate categories. Your hard costs are the ones that don't change from order to order. And then your soft costs or your bulk costs are the ones that are going to change depending on how many units you shipped. It's always dynamic. It's always changing. I'm going to share my process for that in a later video, but just know we really got to simplify it, and one of the main ways to simplify it is to break up your costs into multiple categories. Moving to the second part of the cost of goods sold equation, units sold, you really have two ways to track that. That's either via software, or you can manually track that via Amazon report. So I'm going to have a video that goes directly into how do we adjust for cost of goods sold if we're using a software like Inventory Lab. And then I'm going to have a video that goes into, well, how do we calculate this manually. So every part of this equation, unit cost, we're going to have a video for that, and then unit sold, we're going to have 2 videos for that. So that's my intro, and I'll see you in those videos.